What would worry you? What would make you take meaningful amounts of money out of equities? Is it rates suddenly shooting up? Would that be a factor, or anything else in particular you're watching out for?
Well, it would be the velocity of the moves in either the VIX or rates or inflation, for that matter, right? If we spike up, that is something that the markets don't like. If we gradually grind higher and basically grind higher for good reasons, like rates are going up because we are seeing better growth, inflation's going up because we are seeing better growth globally, those are good things, right? But if we spike, that's not something that I would feel very comfortable with, and I do think we'd have certainly have a correction. And then the other thing is the Fed. I mean, as I mentioned earlier yesterday, they were very, very dovish and really keeping to policy, the existing policies, very accommodative. That's not changing. When they do change, we're going to have a big pullback, in my opinion. It will be interesting to see in that pullback what sectors and what style actually works, because higher inflation doesn't equate to wanting to own growth stocks. And we know everybody is in growth stocks because we've had a 10-year bull market in growth, which is, again, goes back to why I actually lean a little bit opposite of growth, a little bit more value and a little bit more cyclical.
Victoria, how do you see it?
Yeah, so we're actually a little bit opposite of what Stephanie was just saying. I agree that it's the velocity of the moves that are really going to make a difference. And also, if we see a pullback on the consumer, on the consumption component, people are really relying on that pent-up demand. And if we don't see that pull through, that's going to be a concern. But for us, we like the values, we like the cyclicals, and we have exposure there. But we're still overweighting to the growth component right now. I mean, we actually bought NVIDIA this week, and we're not saying that there's cheap stocks within the growth sector, but we think for a longer-term investor, which is who our clients are, you have to really go back and look at those fundamentals. You need to see visible growth. You need to see a business model that makes sense, and you need strong balance sheets with little to no net debt there, and look at the cash flow as well. So for us, we're still looking a little bit more on the growth side, but we believe in that barbell strategy.
Shepard Smith here. Thanks for watching CNBC on YouTube.